Is your money safe with Trading 212? Well, let's talk about it. A bit of background, Trading 212 are one of the fastest growing investment apps here in the UK, with over 3 million lifetime funded accounts and £3.5 billion in assets under management. So they're a pretty serious business for UK investors. Now, I've personally got over £50,000 invested on the Trading 212 platform, and as a company which I heavily feature on this channel during regular portfolio updates, I feel it's super important, if not more important, that you guys are just as aware of what my own portfolio updates are, as you are aware of how Trading 212 also treat your money too, if it's a platform that you go on to decide to use. And as they continue to bring out new products like the Trading 212 Cash ISA paying 5.2% interest, along with the Trading 212 Card 2, that you're fully aware of the risks involved and have a full understanding of whether your money is safe. So in light of that, this might be a little bit more of a boring video, but it is just as important as any other video that I'll put out on this channel. So I'm going to touch on some of the compliance and regulatory stuff, and we're also going to dive into Trading 212's latest financial accounts, which I'll touch upon a little bit later on in the video. So by the end of the video, you'll have a full understanding of how your money is protected, along with how Trading 212 are performing financially as a business too. So if that sounds good, be sure to subscribe to the channel as well. Do me a favor, be sure to drop a like on the video, guys, because it will help YouTube push this video out to more Trading 212 investors. So first off, it's important to say with Trading 212, along with many other financial institutions, they have multiple layers of controls in order to keep your cash safe. And I know this because I used to work for a bank in a regulated environment, and the rules are all the same. Now, when I say cash, I mean the money that you either hold in your stocks ISA or your cash ISA. But do be aware that the cash treated in these different two types of accounts are treated slightly differently. So cash in your stocks ISA, if you opt into the 5.2% interest rate, this money could potentially be held in something called a qualifying money market fund, which is classified by the FCA as an investment, whereas your cash held in a cash ISA is quite literally just held in cash. So let me explain how that cash model works first. Now, Trading 212, as I've touched upon, are a regulated broker. They're regulated by the Financial Conduct Authority here in the UK, and because of that, there are a very specific set of rules and regulations that they have to follow in order to keep our client assets safe. Now, without going into too much of the technical detail, there is something called CAS 7, which is the Client Asset Source Book, which goes into a number of rules, or about 400 different rules about keeping client money safe, along with how that money is treated by financial institutions. Now, Rule 7.13.6 states a firm using a normal approach must ensure that client money it receives is paid directly into a client bank account at an institution referred to in CAS 7.13.3, rather than being first received into the firm's own account and then segregated thereafter. So what exactly does that mean in English? Well, let me give you a bit of an example. Now, simplistically, let's say that Trading 212 have one client, and that client is me. And let's say that I've got a little bit of money, £1, let's say, that I want to put in my cash ISA account held with Trading 212 to get that 5.2% interest rate. Now, instead of when I put that money into my Trading 212 account, it does not sit with Trading 212 in a Trading 212 business bank account somewhere. Instead, what actually happens is that £1 actually gets held with one of Trading 212's banking partners like NatWest. This means that that £1 is held with someone like NatWest, and this is what's classed as a segregation of client assets, which essentially means that Trading 212's assets as a business are completely separate to that of my assets as an individual, even though I'm using Trading 212 to essentially facilitate the service. But Trading 212 are also partnered with a couple of other banks in the form of Barclays, along with JP Morgan too. So technically, it means that my money could technically be placed with any one of these kind of banking providers. What this means in practice, and as stated on Trading 212's website, is your money is ring-fenced and that there are legally binding agreements that your money belongs to only you and nobody else. Now, these three banks that we've discussed are classified as systemically important banks, which pretty much means they're kind of integral to the financial infrastructure here in the UK. And without them, well, would hit the fan quite catastrophically. So I guess you can say it's unlikely that any of these banks are going to fail, which is good for you because that's where your money's held.
That's pretty good, huh?
Now, these banks, because they're also regulated by the FCA, also have to follow the same rules that Trading 212 do in terms of those CAS 7 requirements. So actually, just because you deposit your pound coin with NatWest, actually NatWest also have a segregated client account where your money is essentially sat elsewhere. So you are completely ring-fenced, completely protected from the kind of assets or liabilities of any kind of business, whether it's Trading 212 or any of the banks that they use to essentially deposit your funds. Now, in a nutshell, if Trading 212 did go bust, here's what would happen. Your money is protected anyway by the Financial Services Compensation Scheme, so you are protected up to the value of £85,000 on all of your cash. And that's also £85,000 per bank if one of the banks were then to go on to fail and were unable to return your funds. So any cash held in a cash ISA is absolutely protected. So from my perspective, you can have assurances that your cash is safe. Now, there are two types of investments over on Trading 212, and they're split into capital markets and money markets. So the way this works is you've probably heard of the term financial markets before. That's kind of the all-encompassing term for trading of financial instruments. But within that, you have two separate markets. The first one being capital markets, which allows you to trade your stocks and shares and ETFs and bonds and all that kind of stuff. And then you have money markets, which is where short-term lending and borrowing takes place, which allows you to invest money in something called a qualifying money market fund. So let's break down what that means in terms of the safety of your investments on Trading 212. So let's touch upon capital markets first, so like your stocks and shares. Now, Trading 212 don't actually hold your investments for you, which may come as a little bit of a surprise.
Surprise, motherfucker.
And instead, what actually happens is a client like me wants to buy, £1 worth of shares in a company like Apple. I'll use the likes of Trading 212 to facilitate that transaction and place the buy order for me on the Trading 212 app. But actually, the asset themselves is actually held with a company called Interactive Brokers, who are one of the largest electronic brokers in the world, and they hold nearly $500 billion in client equity as at the start of 2024. Now, that's roughly the equivalent to the market cap of McDonald's, Walt Disney, and Goldman Sachs combined. They're a massive company that very much operate under the same kind of client protection mechanisms that Trading 212 do. This includes the segregation of client and company funds, meaning your funds are separate to that of the business. So in the event of liquidation, it's not like Trading 212 or Interactive Brokers as a business has a hold on the kind of money that you have invested. So if Trading 212 were to ever go bust, then your investments would be returned to you from Interactive Brokers. So in truth, it does make it an extremely safe environment for clients like me and you to invest our funds. But that's capital markets, so what about money markets? Well, if you use the stocks ISA and you opted in for the 5.2% interest on uninvested cash, then this is treated slightly differently to the cash that you held in your cash ISA. As I've said, with your cash ISA, your money is quite literally held in cash. With a stocks ISA, though, it works slightly differently, because this money can be held at a bank, but it can also be invested into something called a qualifying money market fund. Now, right now, all of my uninvested funds are held in a qualifying money market fund. So let me explain exactly what that is and the protection that you have. So a qualifying money market fund is a short-term, low-risk financial instrument that looks to maintain a stable value. These assets can be like cash and cash equivalents, things like US Treasuries, certificates of deposits, and commercial paper. It's all super low risk stuff. Now, on Trading 212, anybody with this feature activated within their stocks ISA could have that money invested by Trading 212. Now, Trading 212 have stated on their website that these funds are held with companies like BlackRock and JP Morgan, which apparently have been active for nearly 30 years with valuations of 100% throughout their entire lifetime. So, like, your money is invested, and technically there is still an element of risk there, but based on that information, it's an extremely low risk. And these qualifying money market funds are typically quite popular with big pension funds, insurance funds, along with the banks as well, in order to hold a large amount of money. So on that basis, I think I can say with a high degree of confidence that your investments are also just as safe as your cash is. But how exactly are Trading 212 performing financially? Well, let's take a look. Of course, you want to use a broker that's financially sound in themselves. Nobody wants to go through the headache of trying to claim money back through the Financial Services Compensation Scheme, or just having any kind of headache where they've invested money and the company that they've used eventually goes bust. So I had a look on Companies House, and they very recently filed their latest audited financial accounts for 2023. So let's dive into the detail. Looking at the income statement, we can see a top line revenue of £95 million versus £98 million in 2022. Now, being honest, I was kind of surprised to see a drop in revenue year on year, because the company themselves seems to be growing massively with huge marketing budgets, so I would have expected a slight increase in revenue. But nonetheless, those numbers are still very much healthy. This will then filter down into a profit for the year of £30.3 million, which is as well down from £41.1 million in the prior year. However, this increase has come from administrative expenses being up 45% from the prior year, thanks to marketing spend. Near the start of the year, you may have seen some of the television ads that were coming on, along with, it seems at the minute, I seem to keep hearing them on Heart Radio when I'm in the car too. So they're spending a lot of money on kind of more traditional marketing methods, which are also quite expensive. From a balance sheet perspective, it's all pretty healthy too. They've got £130 million in total equity, so that's their assets minus their liabilities, which is up from £120 million in 2022. Then onto the cash flow, you can see cash and cash equivalents sits at £87 million, which is down slightly from £99 million in the prior year, but nonetheless, still plenty of liquidity and cash for the business to operate fairly healthily. Now remember, your money isn't reflected in these accounts that Trading212 file with Companies House, because as I said, your money is segregated from the business's money. Now you can see a separate note a little bit further down on segregated client funds, which are reported at the end of 2023 of £2.9 billion, which is now up to £3.5 billion, which we said at the start of the video. So all in all, looking at their accounts, generally speaking, there are a few numbers that have come down year on year, but generally speaking, as a business, they certainly look very healthy and very profitable, which is obviously good for us as investors using the platform. So all in all, from my perspective, there's no real concerns whatsoever. I'll continue to grow my investment portfolio with them, along with continue to deposit funds in the Cash ISA too to maximize the interest rate. To me, they're a safe provider that are fully compliant with all of the regulations set out by the FCA in the Client Asset Source Book, which all of the banks, all of the financial institutions need to comply with. So because of that, I'm pretty comfortable with using them as a company. They continue to do well financially as a company, and they seem to be far ahead of any of the competition in terms of being commission free, along with also continuing to bring out new products too, in order to kind of help us as long-term investors. Now, if you do want to use Trading212, I will obviously leave a link down in the description below, where if you open an account, you'll get one free share valued up to £100 in order to help you get started. With that said, if you do want to see what's in my investment account on Trading212, then be sure to click on that video next. And with that being said, see you over in the next one.